Hi, I'm Christopher Wassenar. I am Versapay's General Counsel and Chief Risk Officer, and I have the pleasure of working at Versapay, where I'm helping set up our global PayFac operations. As part of that global PayFac operations, we will actually be controlling much more of our customer experience. And the most exciting part about it is while I'm technically in a risk and operational role, I'm actually front and center with the customer's experience. If you think about a traditional independent sales or referral model, you can be a software company and you've worked for months, perhaps even years, chasing down this particular customer. You've convinced them of the value of your software. You've got them to sign an agreement. You're beginning to implement. And this one tiny little aspect is the payment aspect. And at that point, you lose control of your customer's experience with your brand because you actually introduce a third party, a traditional payment processor, or a third-party financial institution. But at that point, all of the information that you have about that consumer, that relationship you built, is now put in a third party's hand, and they may not know anything about the consumer or the merchant that you're trying to land. And it's a very powerless position to be in because you've worked for, again, months or years to build up that relationship, explain that value, and at the last second, you've turned that over to a third party. So there's two different examples. The first is in the initial customer experience, or what we call onboarding. If you think about a traditional model where a software company has signed up one of their large merchants, that true business-to-business relationship, in that business-to-business relationship, especially a company like Versapay, who is also a software company and private equity backed, we don't have any concerns about the credit profile of another software company, and issues like deferred revenue, especially when they deal with prepayment of software subscriptions. Those are credit policy issues that we understand fundamentally because they're ones we share. But if you contrast that onboarding experience to the traditional model, where Versapay would have sold its software, not had embedded payments, and then you've introduced this third-party financial institution who may not be comfortable with a private equity ownership structure or deferred revenue or challenges on a balance sheet. We feel very comfortable with those risks because we understand them. So immediately our customers' experience in onboarding is fundamentally transformed. We don't go to someone else. We make the credit decision ourselves, and we make it within 24 hours. So one of the most unique things that I see in collaborative commerce is an understanding of the incredible amounts of data that are associated with B2B payments. And what do I mean by that? You can have a traditional interaction B2C where you simply swipe a card to get your Starbucks smoothie. But if you think about the amount of data that's in an invoice and the timing of that invoice, the fulfillment terms for that invoice, maybe there's an interest rate charge for that invoice pre-negotiated, all of the different really important material aspects of information that businesses share, and then to layer in that and integrate that with payments, that would be your collaborative commerce.